we're ready to buy. Our rent is ending, our lease, and I don't want to renew. I don't want to live in this apartment, and then plus, my family has outgrown it. But we're concerned about the payment. Many times when we talk to them and we say, yeah, the 7.5% rate looks scary, but historically, it's actually not so bad. Yes, historically, it's not the lowest, but it's very high from the highest, where we hear that they were, 12 to 18%, in the 70s and the 80s.
Welcome to Business Ninjas, brought to you by WriteForMe, where you'll hear from business leaders who are out there growing their business and slaying it every day. Learn from the masters. Let's get started.
Hey everybody, welcome back for another episode of Business Ninjas. I'm here today with Robert Niyazov. He's the CEO at R&J Capital Group. Robert, welcome to the show.
Thanks for having me. It's a pleasure to meet you like this, Kelsey.
Yeah, great to have you. So Robert, why don't you start and tell us a little bit about yourself?
So as you said, I'm a CEO of R&J Capital Group. It's an independent mortgage brokerage company based in Queens, New York, but we are licensed in many states in the nation. So we help people refinance or get financing to get into a home.
Interesting. Tell me a little bit more.
Yeah, so we specialize in basically helping people when different situations, different walks of life. Some people want to buy a $200,000 condo, or some want to buy a multi-million-dollar home, or there's some other individuals that are investors, and they want financing for their business. So that's what it is, and we just help arrange financing. We work with a lot of lenders, and we have relationships with them. We know their niches, and we basically meet the needs of the public when they want to find a home for themselves or a home for investment.
Interesting. So now, is it purchasing or also refinancing?
It's both. We do both. It's just with the current environment, rates are higher after being low for many years. So there aren't a lot of refinances, and it's obvious, people are sitting on 3 or 4% rate. They're not going to take 7 or 8. But there are still occasional refinances where people need to cash money out or maybe consolidate debt. So we have those, and obviously people that are buying homes. Again, even that is down because the affordability is obviously controlled by the rates. Once the rates are higher, not that many people can afford it. But again, there are some that need and must buy a home for one reason or another, and we're here to to guide them, to help them, and to have their American dream realized.
I love that. And when we're talking about home ownership, do you primarily see first-time home buyers, people like you said, working, looking for investment properties? Talk to me a little bit about that.
Good question. Yes, there is a lot of first-time home buyers these days because, if you already have a home and supposedly you have a mortgage, you think twice. I have as I said before, 3%. Yeah, I would love to upgrade. Should I really take the, almost double the payment? But those who own a home, if they need more, let's say room, they go with the home renovation project. So sometimes they come to us and say, hey, we just need additional money. And we arrange for additional financing called either home equity line of credit or just a second mortgage. So there are definitely ways that we can help the public and be useful when they need us.
And like you said, rates are higher, right now for refinancing. Talk to me a little bit about, in your role, what you've been working to, mitigate kind of those ebbs and flows.
Yes. So how do we do this these days? You see, when people come and say, look, you know what, we're ready to buy. Our rent is ending, our lease, and I don't want to renew. I don't want to live in this apartment, and then plus, my family has outgrown it. But we're concerned about the payment. Many times when we talk to them and we say, yeah, the 7.5% rate looks scary, but historically, it's actually not so bad. Yes, historically, it's not the lowest, but it's very high from the highest, where we hear that they were, 12 to 18%, in the 70s and the 80s. And of course, the objection sometimes that, they present and say, well, but the house prices were a lot lower, but so are the salaries. So the point is this: if people can afford it, they, in my opinion, shouldn't really look at the rate. If they can afford, let's say, I don't know, a $2,500 or $3,000 monthly payment for their home, then maybe they should consider this. And if they say no, it's too high, there's nothing wrong with renting. They can continue renting. Now, to answer your question directly, we have programs where people can pay, borrowers can pay interest only. In other words, that lowers the payment. Or sometimes we can look and see if they can get a 40-year mortgage, meaning, it's a longer term. And you see, because you have more years to pay it off, the monthly payment is lower. Lastly, sometimes there are adjustable rates that have better, that will give you a better rate, where the rate is not fixed for 30 years. Maybe it's fixed for 5 to 7 or to 15 years. So we can select or at least offer that program and explain the pluses and minuses. The minuses, obviously, if they don't refinance, the rate can jump or go lower. Well, it will definitely change after that initial period ends. However, that initial period can be a long period of time, maybe 7 or 10 years.
Do you think it's, that's those programs and that supports are, one of the reasons that R&J's Capital Group is really able to stand out from its competition?
Look, those programs are available. Those particular programs are available to a wide, variety of, mortgage professionals. So it's not just, the rate, but it's, what really counts. And we did some surveys. What really counts, it's not the rate only. There are some people say rate. And I understand why, but too many, the service, the competence, that's what's important. The ability to, to talk openly to your mortgage professional. And if the mortgage professional is competent, there is a lot, some people don't even know how good that professional could be to help them. Okay, people come and say, I'd like to buy this, but I'm very close. We can offer a solution. Look, you are, find another 5% and we can do it, borrow from family or get a gift from a family. And then, 5%, what, nobody told me this, but let me, so what I'm trying to say is what really separates us, I would say, is the constant desire to help and the skills. We offer unmatched skill where, we learn every day. At this company, we have a learning culture. So we everybody's always willing to hand to hand, basically walk you through the process. We have a system where newer, we call them MLOs, mortgage loan originators. They're salespeople that sell mortgages. Newer MLOs are paired with someone more senior, and then they collaborate this way.
Interesting. I'm curious to pick your brain a little bit, talking about common misconceptions. Do you tend to see, trends that people think is, true, which isn't necessarily accurate within the mortgage industry?
Are you talking about some particular ones, or you'd like me to, to kind of tell you what those misconceptions sometimes are? Because I deal with them every day.
I bet. Which do you see often?
So one of them, for example, is people think that they need 20% down to buy a home. So the answer is you don't. There are programs, here in the United States that, especially people that, lived outside of the country, because that's like, outside of America thing, people need 20, 25, sometimes 30% down. But in the United States, there are programs where you can get into your home with 3.5% down, 3.5% down payment, sometimes 5%. If it's a multifamily home, it used to be, there's a government-backed program, but if we go outside of that, you needed 20% to buy, let's say, a 3-family home, a 3-unit home. Now it's also changing very soon. This month, even the conventional program will allow 5% down payment on a multifamily home. So one big misconception is, the large down payment. The second one, let's say you're a self-employed individual and you work very hard and you have a successful business, but your personal tax return does not support the mortgage requirements because does not work with our formulas. So there are programs that were designed, I don't know, 6, 7, 8 years ago, that can help those individuals get the mortgage without showing tax returns or pay stubs or W-2s. So we can kind of offer the lender the income or the ability to repay with other means, like their business bank statements, the deposits, or the rental income if they're buying an investment property, et cetera, et cetera. There are a few others. And the third one, I'm an independent mortgage broker. So we work with banks, and it's really a growing force in the lending industry in America. The independent mortgage brokers are gaining the market share. Many think the misconception is if I go to the bank, I'm going to get directly, I'm going to cut out the middleman and get a better rate. So it's not true. And I have a lot of friends in the banking system that work with large institutions like Wells Fargo or Chase, et cetera. And often we, not just with them, with others, we check and see where our rates are. And many times the independent mortgage broker can offer better rates because we get them at wholesale rates.
Interesting.
So that's the third misconception, basically, to finish my thought. They think just by going to the bank, it's going to be cheaper, but in fact, it's not.
Interesting. I think that's an important misconception for a lot of people to understand, because I think, specifically first-time home buyers, it's can be a scary time, daunting. They may not understand the processes. So it sounds like, having an advisor and, working with, someone like R&J Capital is super beneficial in order to, help understand the process, understand the tools that are out there to make them successful in their home buying purchase.
Absolutely. Yeah.
So, Robert, I'm curious, as we start to wrap up this conversation, is there anything that you want to leave our listeners with, whether it be advice, anything about, the mortgage industry, trends or predictions that you have, exciting things coming up, anything you want to leave our listeners with?
Yeah, definitely. I think, two things. I guess I have two thoughts. Number one, after this rapid rise in interest rates, we went from virtually 3% to 8%. in a matter of a year and a half, give or take, maybe 16 to 17 months. Rates will start moderating. They will go down. Don't wait until you find a house to consult your mortgage professional, whether, it's a good idea, to buy a home or, to get pre-qualified when you're already in the market to buy a home. Do it now. If you think of buying a home in the next year, you should be consulting your mortgage professionals now. Get a pre-approval, see what needs to be done, get their advice, how to save money, what things to avoid. And by the way, on our website, we have a whole library of what people should know. I'll recommend it later. So, and it's better to maybe not wait until the rates go to 5% to buy a home. What happens? Everybody's waiting, sitting on the sidelines. Once that happens, the army of potential home buyers will flood the market, and that will increase home prices again. That's just logically what I think. And, many experts in the field say the same thing.
Interesting. Well, Robert, anything else that you want to leave our listeners with? I think that's great insight.
I appreciate the opportunity. I would say, I do one thing. I closed, personally, many transactions. And we put a lot of people in their homes. I haven't heard a single one regretting that decision. So, if there's somebody thinking about this and a little bit scared, don't be. It's, usually prices for homes go up, you build equity, you become richer. And on average, a homeowner is, doing much better than a renter financially.
I completely agree with that. Well, Robert, thank you again so much for all of your insights. I think this was a terrific conversation, and I really appreciate you being on Business Ninjas today.
Kelsey, my pleasure. Thank you. It's a privilege to be here.
Yeah, great to have you.